Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Um, a few things actually on the screen today. Well, the most current is this thing that just came out at 9:30, which is the Australian employment number. Uh, the numbers came in very strong, up about 42,000 versus an expectations of around 11,000 and a previous read of around minus 3,000 or so. Now, immediately, the reaction for this was very simply centered around the Aussie dollar. I'm going to pull up here. The Aussie, after having found that low base of around 76 that it has bounced off the last 3 or 4 times or so, is starting to try to move above this level now of 78, which has become a bit of a near-term resistance. Now, obviously, a big reason for this slide was the strength in the US dollar, but the strength in the US dollar has basically been centered on the key economic numbers in the US, which we saw reasonably strong, largely the payroll number. But anyway, just to look at this as a 15-minute chart point of view, we see this spike highlighting that bigger than expected move. And we have seen this being tested around the 78 level, 77, 77, 77, 8, 7, 78 level, and there we see this whole move being arrested. It's still early days, but it's something that I think a lot of traders were waiting for. The number was actually a huge blow up, much better than expected also. Now, the big news today besides that has actually come from Hong Kong, and this was something that's a developing story from overnight. Hong Kong overnight, we saw them reporting a suspected case of MERS. Now, whether this is going to lead to a bigger problem or not, we've seen reports early this morning, unconfirmed, that there may be 3 or 4 people suspected of having that, and they are going through their tests right now. But essentially, a mini panic is starting to be developed or to build in the city itself, and as a result of that, we saw very strong nervousness in the market late yesterday afternoon. Let me just try to bring a 15-minute chart. Now, late afternoon, when this news broke, we saw this panic sort of selling, finding a base on the close. This morning, we're seeing a little bit of a rebound, but it's still early days. The cash market has just opened up, or rather just opened, and we are seeing the early euphoria, or rather the early rebound in the futures not being met by the follow through in the cash. So I think it's going to be very news sensitive throughout the day as traders grapple on the possibility that this outbreak could blow into something bigger. And as a result of that, will businesses be affected? And as a result of that, will this probably take an impact on companies and corporates down there in the near to medium term? But traders, on the other hand, would probably be looking at to possibly sell this or trade on this sort of news on the back that possibly we may see funds actually selling. After all, we've had a very good move where this market is concerned. Remains to be seen the direction it takes. Now, the last thing I want to highlight this morning is also in Europe. The Bund or bonds, or for that matter, has been seeing this big sell down. Last night we saw a reversal late in the game, and this could potentially put a short-term floor anyway around where this product is concerned. But whatever it is, the trend that's been developed down here since the middle of April has seemed to have continued for the early part of June, and this momentum down is actually quite strong. So whether this is a pause or not remains to be seen, but there are a lot of drivers to this story. One, obviously Greece, but two, the bigger story is whether the reflation exercise that a lot of countries, major countries, especially in the US, who is obviously contemplating a earlier lift-off in rates down there, and also inflation numbers coming into Europe, for example, with the latest CPIs and growth figures coming in better than expected, is starting to take a grip. If that's the case, if indeed we are going to see those economies reflate earlier than expected or show signs of inflation, then we're probably going to see further downside down here. But it's certainly one of the products that has actually been taking a lot of attention purely because of movement down there. Besides that, in accordance with the reflation exercise, the euro dollar also seemed to have found managed to build a lower, or rather a higher low after this bounce back from this major sort of support line that we've seen the last 2-3 months or so. So if we can see traction and a bit of push on the upside, breaking let's just be a bit more accurate down here, breaking sort of these levels down here of around 114.5 or so, we may see the euro attack back this sort of range. Anyway, just a few stories for you to look out for. Thank you very much.